Crypto has been flying over the past couple of weeks with Bitcoin touching up against 100,000 US dollars, with these alternative cryptocurrencies flying up. It's the talk of the markets right now. And the question for most of us as investors with mainly stock market portfolios, a little bit more conservative, is there a way for us to get in on part of this action? Well, today I have a few tips from my experience trading cryptocurrency for investors who are looking for just a little piece of that cryptocurrency pie, but want to keep their portfolio safe and want to make sure they do the best they can at not losing out on some of the huge opportunities in cryptocurrency right now. Welcome to Golden Arch Investing. My name is Liam, and on this channel we talk all about investing in Canada. And today's topic is pretty much beyond borders. Cryptocurrency has been an absolutely wild ride for the past several years, with amazing highs in 2021, with brutal lows just last year. Over the past year, with Bitcoin flying so much higher, it looks like we're entering what we call a new crypto super cycle, with lots of cryptocurrencies flying to new all-time highs. Investors want to be a part of this, and today's video is going to teach you a couple things that I've learned in order to have the best chance at getting some of this amazing cryptocurrency return without risking a huge portion of your portfolio. The first and the most important thing I recommend for anybody, including myself, is to remain diversified. And this goes in all things. But when it comes to cryptocurrency, it's really important. And there's a couple different ways to be diversified when it comes to crypto. The first thing I would say, you should never be investing a portion of your total portfolio that you're not willing to lose into these assets. Cryptocurrencies are historically volatile. And so investing portions of your portfolio that you want or need or might have to draw from in the near future might put you in a position to sell at lows. I want you to imagine this for a second. Imagine you had invested in Bitcoin back in 2021. Cryptocurrencies were flying high. Everyone was talking about NFTs. It was just the market to be in. Well, if you had invested in Bitcoin in 2021, you would have seen some serious drawdowns over the next couple of years. If then you had to sell out near the lows in 2023, you could have been down over 60% on your money. That would have been brutal, and you would have missed our historic run by just months. Now, let's take a different scenario into account. Imagine instead you had invested just a portion of your portfolio into Bitcoin, and you had still held on to lots of other stocks in different industries that didn't react at the same time to the same market pressures. Now let's say that you were able to buy more as the price dropped because you maintained your conviction, you believed it would continue to go up, and you got a cheaper price. Well, you could have over 3-4x your money. You could be looking at hundreds of thousands, millions of dollars in returns over the last year instead of having lost half of everything you invested. Now, obviously, with hindsight, all of us can do this. But I think it's important that looking forwards, we think about diversification in a sense of adding cryptocurrency to our portfolio rather than having a separate portfolio of just cryptocurrency. When it comes to crypto, a lot of things are going to move together. So diversifying in the field might work in some cases, but if you're investing in some of the biggest projects, they're likely to be correlated. So instead, I personally think of it as just a part of my stock portfolio, maybe 5-10% depending on where exactly the prices are. And then as time goes on, as things go either well or poorly, I can then dollar cost average, bringing my average price down as the price decreases, or taking small bits of profit if the price increases dramatically. I do want to talk a little bit about diversification within the crypto space though, because I do think that based on what has happened in the past when Bitcoin started to rip and what's happened over the last week or so, you might be really interested in what we call altcoins or alternative cryptocurrencies that are not Bitcoin, not the king of crypto. Now, if you are interested in these altcoins, there's a lot of them to look for. And I don't think you should be looking at them as a random investment. Instead, I think you should be, just like with stocks, looking for strong performance, but also like a larger market cap, a strong product, a good brand, something that will offer you good returns, yes, but also is large enough that you might not run into some of the cryptocurrency pitfalls that happened over the last 2 years. These smallest altcoins or alternative cryptocurrencies tend to be incredibly volatile. And if you catch the move at the right time, they can make you incredibly rich. Yes, but there are so many of them that single whales or large buyers or large owners or insiders totally control that you never know if the market's going to move against you. So instead, I personally tend to invest in larger alt cryptocurrencies like Cardano. This is one I've invested in over the past couple years. It's a fairly large cryptocurrency for frame of reference. It's about $35 billion market cap, which would put it at quite a large company, especially on a Canadian scale. But it's also a coin that has a blockchain and a foundation behind it. So it has some purpose. It's one with a really strong brand name. A lot of crypto investors know this one. A lot of people who work in this like blockchain space speak positively about this cryptocurrency. And so for myself, it's something that I can have a high conviction in. I can dollar cost average into, and over the last couple of weeks, honestly, I can make huge profits. That's the kind of cryptocurrency I would be looking at if I was trying to buy something other than Bitcoin and catch some of that altcoin volatility. Not something that had just come out or had just been listed on an exchange that is flying high right as you're looking at it. Because those coins, these really small market cap coins, can randomly be rug pulled at any time. And by rug pulling, I mean somebody, usually a large insider, could sell their stake, cash out, and there's no recompense, there's no recourse, there's no way for you to get your money back. So stick to the bigger coins and try to pick things that have some sort of utility. My second big piece of advice here, from my own experience, is to do your own research. Now, I'm going to break this into two pieces, sort of, but really I think it's important that you learn about these companies, because most cryptos are backed by some sort of foundation, have some sort of purpose, exist on some sort of blockchain in some capacity as some utility. That's the concept here. They're not just commodities. And yes, I know they're traded like commodities, with the price volatility being the thing most investors, including myself, are looking to cash in on. But if you're investing in something just because you think it'll go up, there's no reason for you to average down. Imagine, again, you were that investor earlier who had purchased Bitcoin at $50,000, $60,000, had watched it drop by tens of thousands of dollars. If you're investing in it just because it keeps going up, there's no reason for you to hold. Logically, you should sell. We know that's not what you really want to do, though. So investing in currencies that have some sort of utility, that you've researched, that you believe might bring real value, makes a lot of sense to me. And that's something I've tried to do over the past couple of years versus back in the day when things like Dogecoin were all the rage just based on their internet notoriety, their price action, and their sort of volatility. The second part of this piece of advice to do your own research, and really sort of the most important thing I'm going to say here about research, is don't invest in something because someone tells you to. There are so many excellent creators on this platform, on YouTube, who talk about cryptocurrency, who can break it down and make things that are entirely alien to people like me make total sense. They can break down technologies that I don't understand. They can explain the utility of these things. And when I'm doing my research, I look to cryptocurrency YouTubers or bloggers to help me understand what I'm seeing. But that doesn't mean I buy things just because they say it's good. Because then my conviction in my own investment is based entirely on what they said to me. Which means if I don't fully trust this person and things don't go my way, again, I have no conviction and no reason to hold on to this currency, to this commodity that I invested on a tip. It would be the same thing as buying a penny stock because you read an article about it. When things don't go your way, you're unlikely to be in the position you want to be in. So you might have picked something that was not really what you wanted to invest into because you didn't really understand it. and you're unlikely to be willing to hold on to something that is losing you money based on a tip. So do your own research. It's really, really important. And it's no less important in this space than it is in the real sort of physical stock space, because they're essentially similar things, just with different formats. Now, the final piece of advice I'm going to give here, and I will consider this real solid advice, is hold your cryptocurrency in your own wallet. If there is nothing else you learn from this video, remember that. Exchanges are not brokerages. When I have my crypto ready to be sold or ready to be bought on an exchange like Coinbase or Binance or any of these huge companies, they are not my brokerage. I am not insured. There is no requirement for me to get my cryptocurrency back. And once it's gone, it might never be recovered. And so I strongly, strongly recommend you hold your cryptocurrency in your own wallet, and preferably in a cold wallet or a physical piece of equipment that is used to store that data. That is the single most important thing any novice crypto investor should know. Because if you do not hold your currency in your own wallet, you could end up like the people who had their crypto at FTX and had it taken from them because the exchange collapsed. You could end up being scammed out of your crypto by an exchange that offers a crazy APY and instead lends out your money to try and make more in a format that's like a bank with no insurance. Or, and sort of the worst option here, you could get hacked. Exchanges have been hacked many times, and as cryptocurrency gains in value, there is an added incentive for bad actors to take your currency. If you have the key to your wallet, so either the literal seed key or you physically have the wallet on your system, or even better, unplugged and just sitting there, stored away, waiting for when you want to sell, that is the safest position you can put yourself in as an investor. And if you're not fully willing to do that, if you don't really understand how that works and you're scared and you think, oh man, I'm going to lose my money or I'm going to get hacked, maybe it's better for you to be buying a Bitcoin listed ETF rather than trying to dip your feet into the market of cryptocurrencies and risking having that money stolen from you. Now, let's just sum up what I've said here so far. Number one, you should be diversifying your portfolio, and crypto should be a portion of your overall portfolio rather than an entity on itself. Number two, you should be doing your own research. And no matter how amazing some of the people on this platform are that talk to us about cryptocurrency, you should still be doing your own research, building your own conviction in your investments. And number three, most important, hold your cryptocurrency in your own wallet. Do not keep it at an exchange. Don't take that risk. Those are three pieces of advice that I learned as a novice cryptocurrency investor the last time we had one of these huge super cycles. It looks like we might be set up for a large run in crypto over the next year plus, maybe up to 5 whole years. I'm not really certain, but I do know that as somebody who has a small portion of my portfolio invested into a couple cryptocurrencies that I believe have some actual utility, and things like Bitcoin, that is the headliner and probably the most important cryptocurrency, I have faith that things are safe, that my coins are protected, and that I'll be able to benefit no matter what happens in the near future. And I think that's the same position a smart investor who doesn't fully trade in this space should put themselves in as well. If you have anything you'd like to say about this, you want to leave a comment down below, please do that. If you agree, or if you think there's more pieces of advice that novice cryptocurrency investors should hear, 100%. And if you have any Canadian specific advice that you'd like to give. My personal thing, don't invest in a CAD, a Canadian dollar listed Bitcoin ETF. The fees are crazy. It's just not worth it. Invest in US dollars. The transaction between Canadian and US dollars is going to cost you less than the fees on those Bitcoin ETFs in Canada. Don't know why somebody hasn't made one that costs less. But still, that's all I have for you guys today. I hope you enjoyed the video. If you made it this far, please like and subscribe to the channel. It means a huge amount. I'll catch you in the next one.